Hello, everyone. Today's a day that we need to have a sober reflection on the state of the country. Um, I'm quite emotional now. I mean, we must have heard today's October 20. We must have heard about the unnecessary slaughter of our brother and sister at Lekki Toll Gate. Um, I mean, the whole NSAS protest is all about our future. We just want to have a good life down the line, and I don't think, and I guess all of us, we don't think whatever protest or whatever curfew warrants such kind of attack from the Nigerian government. My heart really goes to them, goes to the family, and I think we should not lose faith. Yes, this money map time. Maybe someone is wondering, is this a political discussion or something? No. But if we are talking of money map, if we are talking of investment, financial freedom, of course, we know that that comes with the assumption that we will be in a very safe and secure country, and so this has to be put in consideration. And of course, I guess we are aware that the political state also affects the performance of even the so-called investment, be it agric investment, stocks, whatever it is, that's happening in the environment really affects our investment. This episode, I just prepared it especially for Aisha. Aisha asks about any investment that you can invest and leave. That was her exact term, that invest and leave investment. So I interpret that to mean that something that your mind will be at rest and you don't need to be waking up every minute to check. Of course, on the long run, all investment you still have to monitor it, but there are some position and some companies that you invest in, and you are rest assured that everything is going to be fine. So for the invest and leave, it's going to be in series because we have different investment teams. Some people talk about investing in marijuana stocks. Some talk about investing in electric vehicles. But I think for today's episode, I'm going to be talking about investing in the PC manufacturer, the company that invests in our laptop, our desktop, and those are names that we know. They've been around, and the world will never stop using PCs. It's true that a lot of computing function can now be done on our smartphone and other smart devices. But the need for PC will always be there, especially now that it appears work from home is has come to stay. I mean, in Nigeria, we thought, okay, maybe after what's it called, COVID-19, um, maybe we go back to the old way. But you can see that there's just another issue that will require that people work remotely. Now we are facing NSAS. So those things are boosting demand for PC, the use of PC. Children have to learn with PC. We have to watch church service with PC. Maybe family want to gather together. So many so many things that we warrant the use of PCs. So we are looking at the PC manufacturers today. So we know the usual suspects. I mean, Apple makes PC, Lenovo. So I've looked at five of them for today: Dell, Apple, Lenovo, HP, IBM. If we are looking at in terms of price, I'm sure we all know that Apple is the most valuable company right now, with a market capitalization of over 2 trillion, $2 trillion, not naira, $2 trillion dollars, and the price is like $117 per unit. So if we look at it in terms of price, I mean, IBM is even more expensive than Apple right now. So we are looking at Dell, Apple, Lenovo, HP, and IBM. So IBM is about 118 in terms of absolute price. Um, and in terms of revenue, those who are really making sales, Apple is in another league on its own. I think currently looking at 259 billion in sales, and the next to that will be Dell, 99 billion. After Dell, you now have IBM coming third, that with 77 billion, and Apple is still the most profitable. Apple is still the most profitable in terms of profits, followed by IBM itself. Then when you're talking of how they're able to, from their profit, so it's one thing to sell, it's another thing to be able to make profits from the sales. So I think IBM is doing better in that regards. Ability to really cost of their production is minimal. And I also want to talk about their sources of revenue. So I mean, we all love Apple products. Apple products are cool. The AirPods, the iPhone, whatever series they've got out. I mean, these are the Mac laptop and the rest. So on the other side, Dell, where so for most of them, I was looking at computer manufacturers, but I just realized that so even many of them are into other services. Creation of cloud computing facility for their clients. So IBM even make more money from cloud computing and creation of storage space for various companies than from what they make from PCs. Like 35% of IBM revenue is coming from services to companies that for creation of storage. Dell also in that service too. Lenovo is almost like Apple but much smaller. So Lenovo they has some say Chinese stocks, so to speak, though listed on the regular exchange, the US stock exchange, but it has links to China, and they do quite nice products. They manufacture nice products, PC, even TVs and other devices. So when we are talking of if a stock, I don't know. I believe most of us have heard of the term price earning ratio. So it's one of the ways we can know a cheap stock. So what you are doing is that you are relating the price to the profits of the company. Uh, so you are saying so if you say price earning ratio, for instance, now we have what I'm looking at. IBM has Lenovo actually has the lowest, so that Lenovo seems to be the cheapest to buy, followed by IBM. Apple is also very high. Apple is also there with about 35 P of 35. Don't bother too much about the numbers, but the whole idea is that you are paying more for the profits of the company. So IBM seems to be a cheap one to buy. Another thing I want to talk about is looking at their price range in the last 52 weeks, which is like in a year period. So out these five stocks, some of them are closer to their lowest price for the year. Some are so if I look at Dell, their lowest for the year has in the last 52 weeks have been 25 and the highest is 51. Sorry. Um, the okay, let me so the lowest is 25 and it's currently 69. So it's closer to the highest price. So because if I'm looking at which one to buy out of the five, I'll be looking for those that are closer to their lowest price so that I know in my mind that okay, if I have had a high price in the past, then it can go back there. So if, for instance, let's look at IBM, which is my real interest in today's discussion. So IBM is currently $118. The lowest was 90. So $118 to 90, maybe that's about $28. But the highest in the last 2 weeks was 158. So there's still upside of about $30. So those high and low prices they serve like a kind of memory for investors. So investors remember, oh, this thing has been as low as this, or it has been as high as this. So meaning that the two bands can be reached at any time. The lowest price was during the lockdown period, so that's not likely. But the highest price was 158, and the current price for IBM is 118. So I would like to see IBM. I think IBM can get back to 150. So it has high, I mean, it has a good upside potential. When I say upside potential, that the price can go up more. So HP, I've not talked about HP since. So HP is also close to the lowest price. HP is currently $9.9, $9.45, and the lowest was 7.43. So it can it can also it can also go up because the highest for HP was 17.59. So HP also has that high potential. And so, okay, I didn't mention these stocks, they have, at least many of them have good dividend yields. So, dividend yield is relating the dividend to be paid to the price. So, as we speak now, Lenovo 5.2%. So, you will get, if you invest $100, you could make 5.5 dollar from Lenovo. Same with HP 5.13, IBM 5.1. So Lenovo, HP, IBM, you could make like 5% in terms of dividend, and you agree that that is almost close to some of the euro bonds that we're talking about. Though I mean, you could see attract tax anyway. So the dividend opportunity is there and the price appreciation is there. So price appreciation opportunity is also there for IBM, for HP. But Lenovo on the other side, Lenovo is closer to the high price. So Lenovo currently $13, and it was the highest has been $15 in the last 15 weeks, so it's closer. So I won't be going for Lenovo right now. Apple currently 117, and the highest was 137. Apple can still grow. I mean, Apple has the reputation of keep bringing out fantastic product for consumers. So I expect them. So Apple is one of those that you will at 35% 35 P ratio, not very bad. So Apple is also a good place to be. Um, Dell 69. Dell is currently $69. Um, and 90. Okay, so we are not okay. Let me confirm the highest price for Dell so far. Okay, 71. So Dell was 71.45 highest, and is currently 69. So we'll not be looking at Dell because Dell is closer to, at current price of 69, is closer to 71. So in the short term, it may not significantly go higher than that. So the way this lowest and highest price works, that it's in the memory of the investors. So when it's falling, they will remember the lowest part it was. When it's growing high, people remember those ones. So they tend to unconsciously, it's like a limit. And so the only thing that will happen that will make any stock to breach either the upper limit or lower limit, that something that has not happened before that will happen, either positive or negative, then it cannot breach that limit. But the default position is that within those bands, investors tend to remember, oh, it was so so so, and when they get to that place, they don't want to buy, or it was as high as this. After that, they feel, oh, it will not go well, and they want to sell. So it's an emotional thing actually. So we are looking at both the possibility of the price rising as well as income, dividend earnings. So I think Dell is out of what we should look at. IBM is good to go in terms of IBM is good to go in terms of opportunity to go up from the current 118 to possible 158, like $40 um more that we can earn from capital appreciation. Then the dividend of 5% is also there. And so also HP lowest 7.5 and highest now is current price 9.45 and highest was 17. So HP can almost still double, and it also has that dividend possibility. So I think HP is very decent. HP is very decent. What other thing? Okay, so if we look at so if we look at them again in terms of what they are doing, so Dell They are creating clean solution. They sell to commercial customers. So all I would say is that Apple is always Apple. I think when you say to invest and live, I think Apple is a good place to be, no matter what, because of their ability to innovate, and they have the cool factor. I'm sure we are aware of the new 5G phone that they want to launch. So I'll go for Apple. Also do HP, and the IBM. So there's always, so for Aisha, there's also a way that we have to, allocate our portfolio. Portfolio mean that all the assets you have. So if you're going to have, let's say, 10 or 20% for technology, then we can now look at splitting between Apple, IBM, and HP. So Apple will always we has strong upside potential. So Apple must be part of the invest and leave, and also either of HP or IBM, but we'll not be looking at Dell and Apple right now, just because their current prices are close to the highest for the period. So Apple, HP, and IBM. So that we could start with, and so that would be it for today, for this episode of Invest and Leave. We'll look at other teams in subsequent edition. Thank you so much. Let's remember the country in prayer. Let's remember the victim and family. And God bless Nigeria, and God bless you all. Good night.